Bosh, how's it going, everybody? My name's TradeX, this is my trading den, and today we're talking about the H1 to M5 model. I know, it's not the sexiest name, it's not like ICT's Event Horizon. I must get his marketing dude on my team. But very, very simple, but guys, the gold in this episode is huge, okay? So don't worry about the lack of a sexy title. Trust me, this is gold, and you want to understand it and memorize it. Very, very simple. Mechanical based trading, and it's rule based. So for those of you who like mechanical based trading, this is going to be for you. And this is how mechanical it is. We have 4 steps. 4 steps. That is it. We have to be in a parent, premium, or discount. We have to have a buy side or sell side sweep of the H1, and that is the hourly time frame. We have to have price closing above or below liquidity on the H1 that we've just purged. And then after that, we are looking for a 5-minute fair value gap in a premium or a discount, depending whether we are going to the buy side or to the sell side long term, whether we believe price is continuing down or moving higher. So guys, without further ado, let's jump straight into this video. If you do find value, do consider smashing like and subscribe and hitting that bell notification so you can be reminded of future videos. What is number 1 on the H1 to M5 model? We have to be in a parent premium. So if you don't know what parent and subordinate price swings are, I've done a market structure series. We've just started it, but the episode on parent subordinate price swings is fundamental for your guys' understanding of what these are. But we have a parent price swing, and the parent price swing on to the hourly is the daily, okay? And what we're looking for is a dealing range to form, and a dealing range forms when we have a protected high that puts in a new low. Okay, so this is our protected high at this point in time. Okay, when this high puts in this low, this then becomes our dealing range on the daily, right? But we're going to talk about this example here, and at that point in time we only had this dealing range form. Okay, so this high which put in this low, parent premium. So are we inside of a parent premium? Yes sir, we are. Okay, so automatically check one off the M1 to the H1 to M5 model, right? Secondly, we are looking for a buy side or sell side sweep inside of that premium. Well, what do we have? We have buy side form here, okay? And this is where we are looking for a sweep. So do we get the sweep of buy side? Yes. Now, this is the most fundamental part of the H1 to M5 model. We have to have the candle close below buy side when we're looking for bearish continuation. And we'll look at a bullish example in a minute, but this is a bearish example. So this is a sweep of buy side, right? But does this candle, which sweeps this buy side, close below this buy side? No. So we don't have an entry yet. We can't go to step 4. Does this candle close below this buy side? Yes, it does, right? You see this candle closes below this buy side. So now we can start hunting for a 5-minute fair value gap on the next candle, right? Because obviously the candle has to close below. So when it closes, a new candle forms. So this candle, the following candle, so this is the 3rd candle in this row, in this example, is the candle we'd be hunting for a 5-minute fair value gap, okay? So we are looking for a 5-minute fair value gap inside of a premium. Well, let's go to that piece of price action, okay? So here we have it. This hourly candle closes above, the following candle closes below, we get this wick, and then we're searching for our 5-minute fair value gap. Where's our 5-minute fair value gap? Right here. So we can frame entries on this 5-minute fair value gap. Stop goes above the high. Why does it have to go above the high? Well, this is our secondary entry. A primary entry would be here. If you don't know what they are, please watch that episode, guys. And then obviously price continues bearishly. Okay. So this is the second example. This is actually forming on this day here. Are we still inside of a premium? Yes, we are inside of a premium of this dealing range on the daily. Check one. Now, do we have buy side inside of a premium that has been purged on the hourly? Yes, boom. Does the candle or the following candle close below that buy side that it's just purged inside of a premium? Yes. So it actually happens on the very same candle here. You can see it wicks, takes out this buy side, then closes below. So what do we now do? We look for a 5-minute fair value gap inside of a premium. All right, cool. Where's our 5-minute fair value gap inside of a premium? Right here. Bam. This is where we look to take an entry on the 1 minute, or you can stay on the 5 minute, and you can see it comes up to it again before moving lower. Right? We can look at another opportunity. And this time we were all the way down here, right? all the way down here. So you can see we have buy side pull here. Let's bring this back. Were we inside of a premium? Anything above 50% is technically a premium, and we hadn't put in this new low, so this hadn't validated a new high as of yet. So this was still our protected high and our low. Okay, so this is still our dealing range. We are still inside of fair value and a premium. So a fair value is 50%. Anything above 50% is a premium. Anything below is a discount. We were inside of a premium, a short-term premium, but at fair value. Okay, so this hourly candle closes and takes out this buy side inside of a premium, right? Right. So what we're looking for, a candle to close below that buy side. This candle closes below this buy side, right? Right. So on the following candle, once this candle closes below, because this candle didn't close below, if you remember, we are looking for a 5-minute fair value gap inside of a premium. Where's our 5-minute fair value gap in a premium? Right here. Boom, bam. There's our entry, stop above the high. Okay, so they are bearish examples, but we could look for a bullish example, and we actually have one for NFP, and this is how we could have used NFP to our advantage. And if you're inside Red Pill, I personally traded this long for about 15-20 handles. There were other confluences, I admit, but this is one you could have used. So what do we have? We have price now taking weekly sell side, so we could anticipate price to purge and revert, essentially. So reverse or pull back, okay? So here we took out a weekly sell side. So it's here where we can anticipate price pulling back. Yes? Yes. So we have on the hourly this sell side, which gets purged on this candle. But what we're looking for, we are looking for a candle when it's bullish to close above the sell side. So does this candle close above this sell side? No. Does this candle close above this sell side? Yes. So on the following candle, this is where we'd be searching for our 5-minute fair value gap. So you could anticipate at a later date for price to come back to what? That 5-minute fair value gap. Bam, into that 5-minute fair value gap before exploding higher. Okay, so they are both bullish and bearish examples. Now guys, what I will say at this point, there are other time frames you can do this on. Okay, so there are other time frames you can do that. But if you want to know what they are, feel free to hit me up in Red Pill Trading, or you can hit me in the comments. I'll get back to you. There is the H1 to M5 model. Go back into your charts, back test it. Hit me up in the comments. Let me know how you get on with it. If you find value in it, share it. Let me know. Okay. And until next time, guys, trade safe, trade smart, and I'll see you on the other side. Abosh!